Hey guys, how's it going? Saturday, June 28th, 2014, and I wanted to do this video. I've been so busy this past week, but had an absolute smasher of a trade on Thursday, and definitely wanted to talk about it. It's one of my favorite setups. It's called the triple tap pattern, and I'll talk about the reasons why I love it so much. But for those of you that don't know, the triple tap is you can Google it. It's on nobrainertrades.com. It's a great pattern, and it's a type of accumulation or distribution pattern where basically the market is progressively, if it's an accumulation pattern, the market is in a downtrend and it just keeps on making new lows. But each time it makes a new low, it immediately goes bid, and vice versa for a distribution pattern. And it's one of those setups that it doesn't happen too often for me. I usually will find it after it's already happened and it's too late. But this time I just happened to be at the right place at the right time. And I literally went all in on this trade. When I say all in, it's still below 2% of my equity. But it's an absolute stellar trade. And my interpretation of the pattern and my criteria for it to be an actual triple tap pattern for me is a couple things, and I'm going to talk about that. So this is what I saw on the hourly, and you can see this is the morning candle was this guy right here, this massive drop. And as much as I would love to say that I was in that move short, I didn't. I wasn't able to catch this move. But as it traded down in this area, I just happened to be watching on the minute chart and saw what I saw and realized that I couldn't even count the number of reasons why I wanted to be in this market long. Um, so what is the criteria for a triple tap? Well, first of all, it's got to happen in the right area. It can't just happen in the middle of nowhere. And this was the right area for me, and let me explain why. So first of all, we had this massive drop in price. All right, and one of the things I love to do is when the market is just absolutely panic selling on one single candle, I'm looking to get long somehow if there is a setup. And it happened to be crashing right into a daily trend line. Now, just the context of this trend line, we only had, for a trend line to be valid, there needs to be 3 points. So there was only 2 at the time. There was this touch here and then this touch there. But when you have something like that, it's a good bet that you're going to have buyers stepping in here. And what's better than a trend line that a candle is crashing into it on the daily chart is when it actually breaks below the trend line slightly, which is likely to sucker in people to initiate short, looking at this as a break of that trend line, trying to get involved on the short side and getting themselves trapped on the wrong side, especially after it's already, the market had, put in an all-time high and it actually broke above that all-time high, and so the market was starting to pull back, and it was heading right to the bottom of this potential trend line at the time. So there was that, and the other thing about this was that on this candle, it was already trading beyond the daily ATR. And ATR is just the average true range. It's the measurement of, every daily candle has a range. And what I do is I'm trading the minute chart. So what I like to do is I like to look at what is the average range of the day for the week. So it's a 5-day ATR. And coming in on this candle, the ATR, the average range on the low side was 16680, which put us right here. So in other words, the market had already exceeded its average range for the day. So when the market is extended that far beyond, it's it's usually a good idea to start looking for a long, and vice versa. So if the market had pushed up beyond its ATR for the day to the upside, um, you'd be looking to get some shorts in that area. And yeah, and just to clarify, the average true range starts from the high of that candle. So the high of this candle, which was 16,800, to subtract the ATR on that day from the top, and that's how you end up with that number here, 16,680. So not only that, but we were also trading below the left eye of the the FOMC rally, where if anyone was looking to get short here on the break of this low here, and even the break of this low here, they just got absolutely wiped out. And I actually watched this candle as it formed, and it was just a massive flash to the downside, and quickly quickly reversed and just pushed to the upside. So everyone who got short here in this area, and everyone got short here when the market returns, obviously they'd be looking to get out at the point where they entered, which would be here, and also here. The market didn't get there, but it just makes this area a hot zone for buyers to step in. So the other thing that makes this so great, and this is just sort of a function of the triple tap pattern, is that when you have this kind of pattern, you'd have bullish divergence if you were to put a MACD indicator. And I didn't have that on my chart. I don't really need it if it's a triple tap pattern, sort of implied. But if you were to throw up a MACD, it would probably look something like this. So you'd have like the MACD, the baseline, the zero point, and I can't draw a squiggly line on this chart, but I'm going to try. So it would be, this is going to be the worst drawing ever. It would be something like this. Let's see if I can actually do this. Oops, come on. Something like that. So basically, if you had the MACD on your chart and you had the actual price chart, you'd be able to draw a line like that, and you'd be able to draw an inverse line like that, and that's where the divergence is. So in other words, the chart is downtrending, but the MACD is uptrending, and that's so yeah, it's just another reason to take this trade. So and aside from that, I mean, the other reason is that we're trading right near the S2 level, which happens to correspond with this level of support here, which you can see. These touches, all this stuff in this area. Oops. All this stuff in this area here. It's trading right into this zone here. So once I saw that, and once I realized that's what I was looking at, I started to scale in a position here. And it started with, you can see me typing out triple tap because I just wanted to be sure to remind myself that this is what the setup was, and this is what I wanted to talk about when I was recording this video. I just sort of recorded this video and just paused it throughout the day. But I started scaling in a position. You notice that my stop is 1 point below that candle. Such a well-defined risk reward for this trade. It's just rare that you have a chance to have a setup where you know that your stop is going to be exactly at that point. Like that is literally the line in the sand for this kind of a trade. Because if it breaks that low, it's not a triple tap. So, and I actually was spreading this out across 3 accounts because it was likely that I was going to have to hold this through the overnight. So I need to account for an overnight margin on this trade. Actually, it got the target the same day, but there was a probability that that wouldn't happen, and so I had to spread things out a little bit. But I was in this market with 6 contracts And still, even with 6 contracts, that's a lot for me. Um, my risk was only 618 total, um, and I banked 1790. So it's a return of 2.9 R on this trade. So just watching how I let this play out. So I had the advantage of watching this on the minute chart, and basically I was just looking for the market to make dips, so I could buy on the dips, and so I added a second contract there. And the market, had a little push up, started to retrace, and when the market dipped back inward, I just added another contract on a different account. Target is basically the main floor pivot, and the last support before the drop, because that's where traders are going to be likely to take profit, and also for shorts to start to get involved in the market. Having seen this massive drop, they want to get involved. This is probably where they're going to do it. So this is the first trouble area for me, and so just checking my stop there. So again, it's 658. I was checking the low of that candle to make sure my stop's in the right place. And the market gives me another dip. And so I just add another one. And I added another contract. I don't think I have the video. I was just pausing the video every once in a while. But I had 3 contracts on that account, and just let this thing play out. And you'll notice that on this trade, I didn't even move my stop. My stop just stayed there the entire time. So the market it just started going sideways a little bit, but you can see it was just gradually rising. There's a trend line that sort of broke below it, and then just had a breakout to the upside, and finally got that push to the upside. And once it got within, it's like 99.9% of my target, just go ahead and take the profit, because I'm not going to take the chance that it just gets like within a few points of my target and then pulls back massively. So I just cut the other contract there. So I'm out of 3 contracts, and I take the fifth one out here at some point here. So now I actually left on 1 contract to run, hoping to see if the market could stay above. Unfortunately, got taken out yesterday, the next day when the market had pulled back, and I had my stop out of the way, but it was, I had my stop at an area where I wouldn't have felt that the market would continue. So I had my stop in an area where I wasn't bullish any longer, but the market, it did find my stop and poked me out, and then late Friday afternoon, the market just rallied to the upside. So all in all, just an absolute stellar account building type of trade. And just to clarify the criteria, just to make sure I go over this again, because I think I left something out. Yeah. So with the triple tap pattern, the keys to this are that the market needs to have 3 taps that you can connect the dots with a trend line, and each time it makes a low, it needs to immediately go bid, and vice versa for a distribution. And one of the criteria that I look for it to be valid is that on the 3rd tap, it must break below where's my line here? It must break below the low of the 2nd tap and close below it. All right. And when it closes below it, the next candle has to immediately go bid. And that's how that's my criteria for for this pattern. And you can see it did exactly that here. Closed below and went bid on the next candle. And just to show some other examples, like I said, this is like any setup in the market. This is true of any setup. You cannot go fishing for it. You can't go looking for it because it's one of those things, I just used to do all the time. I used to find a new setup, read about it somewhere from some trader on some website, and then immediately just start looking over every chart, just trying to find it. And just, it's sort of like looking at clouds and trying to find pictures in clouds. It's just one of those things. It's just got to happen. It's got to happen the right way. It's got to happen in the right place and at the right time. And it was just one of those things where it's in my trading plan, but it just happened. I was in the right place at the right time, and I was ready for it when it happened, because I was able to identify the criteria and just get on board. Here's an example from the Eurobond from last year, and I just happened to see this one. I didn't trade this because I found this one after the fact, but this is on the 5-minute chart, and you can see the criteria is, first of all, the market was had ranged and then broke to the downside, so it sort of sets you up for looking for something for a setup down this area to buy. And what do we get? Well, we have some momentum push to the downside. You can see the momentum there. The market finds support, goes bid, and then makes a new low. Immediately after making a new low, it goes bid. All right, and then it makes a new low. And you notice that on the third tap, it actually broke the low of the second tap, closed below it, and then on the next candle, immediately goes bid. All right. And when you have that, like I said, for my criteria is for entry is that my stop will go 1 point or 1 tick, depending on which market, below the low of the third tap. And if it breaks that low, it's not a triple tap pattern. So for me, based on my criteria. So that's that. And yeah, just one of those trades that just comes every once in a while. And like I said, I was literally all in. There's so many reasons to get involved in that trade. Yeah, this is an account building trade. This is the kind of trade that I just absolutely smash. And great way to end the month. It's the month of June. So anyways, that's that. Hope you guys get something from this and be ready for when something like that sets up in the right time in the right area. That's the criteria I look for, and glad I could share this with you guys. And hope you guys had a good month, and talk to you in the next. All right, take care.